For more on the day's market movements, Adam Dawes from Shaw and Partners joining us now live. Adam, good morning. So yeah, a bit of a mixed picture on Wall Street overnight. Lots to digest, certainly data-wise at this point. What are you expecting for today's session locally?
Yeah, well, as you said, those futures are looking fair, well, somewhat negative. I don't think it's too much of a push to the downside. I think our equity market overall should be okay today. We've got some excellent results coming out throughout the day, and I think we're expecting a fairly decent reporting season as well. So I think definitely our market today should be okay, and potentially if we end up evens, I'll be very, very happy.
All right, that sounds pretty positive to me. So Adam, interested to see what you're looking at the moment. Now I know certainly infrastructure in the news with various assets. Obviously Sydney Airport has attracted attention, but that bid has been rejected by the board.
Yeah, it certainly has, and I think it's probably fair that they've rejected that takeover bid from the consortium of infrastructure investors, and I think infrastructure is going to be a really big theme going forward in a lot of clients' portfolios, so sort of keep an eye on that infrastructure space. But look, yeah, I think that long-term asset, or that value of that long-term asset, is certainly one that's been undervalued. The consortium offered $8.25 for the airport, valuing it nearly at $17 billion. Now that offer was significantly at a premium to the recent closing price, but well below the share price from where it was trading post coronavirus. So look, I think this asset is a fantastic asset. It has delivered some fantastic returns. Look, I think this consortium is probably taking advantage or putting a low ball offer or a bid in. And look, we still know that traffic is down a fair bit. Traffic, and especially international traffic, remains down around about 90%, and that's where they make a lot of their money. So I think they're trying to get this thing at a cheap price, then potentially see the growth going forward into sort of 10 to 20 years going on. So look, it's been rejected. What's that going to do to the share price today? I think it probably means that it might go a little bit soft today on the rejection of that bid. But that gives the opportunity for this infrastructure group to come over the top and potentially sweeten the offer. And I think that will definitely help move that share price along.
What do you reckon is fair value for the company at the moment then?
Well, this thing, constantly traded, before the pandemic, sort of around that sort of $8 to $9 mark. Something that if they really wanted to get it away would have to have a 9 in front of it, and would probably need to be very unconditional as well. So whether they're willing to pay that much, who knows? But yeah, I think that's probably where investors would be keen to sort of start to think about giving up some of their shares with a $9 in front of it.
All right, now you mentioned infrastructure in focus at the moment with potential takeover targets. Another one being Spark Infrastructure Group. I know you've been taking a look at that. That's energy infrastructure, that share price surging yesterday before entering a trading halt. Can you give us some more detail on what's going on there?
Well, there was a little bit of speculation and potentially a little bit of a leaky ship, but Spark was halted yesterday after some media reports of a possible takeover of the stock, or an approach for a $4.4 billion business that was unidentified. So we don't know who it is, and it was just media reports, and hence I think Spark did the right thing to turn this into a trading halt and to do that. The stock shot up around 7.8% before being halted, and we expect to hear something a little bit more today. But what's interesting also is that they are looking to move into that green energy space, and they've unveiled a $1.5 billion green energy hub that Spark Infrastructure intends to develop a 2.5 or 2.5 gigawatt renewable energy hub in between an interconnector between South Australia and New South Wales. And that's a really big step for them to move into that green power space. So as I said before, I think infrastructure is definitely one of those areas that you should be looking to top up in your portfolio. I think there's a lot of lazy money out there looking for these good long-term assets, and I think Australia's got some fantastic infrastructure plays to take advantage of that.
All right, let's move to energy. Woodside Petroleum out with an update there, just as far as some of its projects are concerned. It's a really interesting space, energy at the moment, isn't it? Particularly with oil and gas. So where those prices are going is all about, of course, the global recovery at the moment too.
Yeah, it has, and it certainly is that overall we have seen that the energy stocks or the energy sector has underperformed, and it's probably one of the worst performing sectors over the last 6 months. So potentially there's some value there for investors to look at that energy play. But Woodside said that today they said higher realised prices for its oil and LNG gas drove up their second quarter revenue by 15%. As it plans, and it pushed plans to sort of sell some of its stakes in Africa and Australia. Woodside reported second sales revenue of $1.2 billion for the 3 months, despite an output of about 22 million barrels of oil, which is about a 4% fall from where they were before. But with that higher oil price, they were able to realise that. So I think that's a positive for the market. That they were looking at a sort of a US dollar $75 a barrel. And that obviously helped their revenue climb on the back of that. But I think some of the big news that the company's come out today with is it says it's also launched a formal sell-down process for up to 49% of its equity in the second processing unit planned for its Pluto LNG facility. So that's something that we haven't really heard much from Woodside before about what their plans are moving forward. And so this is a really interesting play because obviously Woodside has to do something to get its share price moving. It has to keep shareholders happy, and potentially selling off some of these assets to move into potentially a greener, more environmental company. This is one step towards getting that in play.
Yep, all those ESG considerations at this point for most investors. Adam, thanks for joining us from Shaw and Partners.
Thanks. Have a great day.